Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Hello and welcome back to the Ask Ralph Show. Today we're going to talk about something that is so absolutely exciting that you better sit at the edge of your seat. Now, of course, I'm just kidding. But, for people who do taxes and people who are interested in accounting, this may be something of interest to you. And this article came to us from Bob Carlson. And the title of this article, which ran on September 29, 2018, is What You Need to Know About the New Alternative Minimum Tax. So let's start by talking about what in the world is the alternative minimum tax. And if you've been affected by it, I bet you know what it is. This is what a lot of people refer to as the stealth tax. It was created in 1969 to target wealthy individuals who used a lot of tax breaks to avoid paying any income tax. It's like it says, an alternative minimum tax. And because of the recent tax change for 2018, a lot of the things have changed and it won't trap nearly as many people in the past. The reason this, and if you've watched the news, you hear about this every year. Are they going to fix the AMT? Are they going to fix the AMT? This is something that Congress hasn't really tackled. So what you've seen from year to year is they'll play games with this and they'll make extensions or they'll increase the minimums. The AMT is really a second tax system. What I mean by that is you compute your regular income tax, then you also compute the tax under the AMT by adding back to your regular taxable income any relevant tax breaks. We call those things tax preferences. AMT, which is the shortcut for alternative minimum tax, taxable income is subject to only two tax rates. So as compared to the general tax system where there may be 5 or 6 tax rates depending upon your income, AMT is only 2. 26% rate is paid on the first $191,000 of AMT taxable income and 28% rate on higher AMT taxable incomes. Now, like I mentioned, the Tax Cuts and Jobs Act, which was enacted in December 2017, substantially changed the AMT. Before this, about 5 million taxpayers were expected to pay the AMT under the old law. But here's the great news. Only about 200,000 are expected to pay the AMT this year. And that's the case so much so that the IRS says it's going to remove its online AMT assistant tool. I don't want to get political here, but if they talk about, there's really been a middle-class tax cut, well, this is evidence of that. Because in my practice, I've seen a lot of middle-class people getting hit by this AMT, and they look at me like I'm insane when I tell them, well, you owe money this year. And they'll look at me and say, well, Ralph, how's that possible? I said, well, you've got the AMT tax. I call it the Robin Hood tax, steal from the rich and give to the poor. The problem is that number for rich has really eroded over time, but this tax act at least fixed it for the short term. So what are the key changes to this? Well, let's talk about those. First, the AMT exemption was increased substantially. So what they mean by that is you have an exemption of so much income before this AMT would affect you. So if you're married filing joint, the exemption is $109,400. $70,300 for single and head of household, and $54,700 for married filing separate. So what's the change, Ralph? Well, prior to this, the married filing joint was $84,000. So you're looking at a substantial change there. And the $54,300 for single head of household and $42,250 for married filing separate. So they basically changed the amount of income you can earn before this is affected. So if you're a married filing joint, it went from $84,000 to $109,400. Secondarily, the income levels at which the exemptions phase out are much higher. They are $1 million for married couples filing jointly and $500,000 for other taxpayers. This is a big change here. In 2017, the phase-out levels were $160,900 and $120,700 respectively. Big change. Third, many of the tax breaks that triggered the AMT for middle-class taxpayers have been changed. And that's what I was talking about a little while ago. Middle income taxpayers frequently were subject to the AMT when they had high levels of personal and dependent exemptions, deductions for miscellaneous itemized expenses, home equity mortgage interest, and state and local income taxes. So if you've not been living under a rock, you know that the personal exemptions are now eliminated. And miscellaneous itemized expenses and the home equity interest deduction have been eliminated. And they've put a cap on the state and local tax deduction of $10,000 per tax return. Now, this has all been replaced with a much higher standard deduction, but what that means is these things are no longer tax preference items. So the combination of these changes mean you need to have a lot of tax preference items to trigger the AMT. In the past, because the exemption amount was so low, a slightly above average amount of preference items would push a taxpayer into the AMT. So it's easy to trip that trap door and then you'd get stuck. Now, what tax preference items still remain? You'll find these listed on the IRS Form 6251 and the instruction booklet. Be prepared. It's complicated. These things including incentive stock options. They remain a key AMT trigger for many employees at companies that use them as compensation. Other key preferences items are the standard deduction, some net operating losses, some types of accelerated depreciation and interest on private activity tax-exempt bonds. May also be triggered by significant amounts of long-term capital gains. So as before, the AMT is so complicated that it's impossible for anybody like myself or this person who's writing this article, as a matter of fact, to give general rules about who is at risk. The triggers vary with your regular income tax bracket and the amount of tax preference items you have. Now, generally, the higher your income, the more preference items you need to trigger the AMT. Also, because of some nuances in the interplay between regular income tax and the AMT, single taxpayers are generally a bit less likely to trigger AMT than those who are married filing joint. The bottom line is that you're going to have to estimate your taxes both ways during the year to determine if you might trigger the AMT. And then you can plan your year according to that. Now, so all these things I mentioned are good news. The bad news of this, as is the case with all of the tax changes, is these changes are scheduled to expire in 2025. So if you feel like you're going to be affected by the alternative minimum tax, I really think the best thing to do is meet with a tax advisor or an accountant and go over your situation. You know, we're doing that a lot with our clients this time of year as we enter into the fall and looking at, where are we going to be this year? In my personal view, I think a lot of people are going to be exempt from this AMT because of the fact they've set those thresholds so much higher and they've eliminated a lot of those tax preference items. So I'm not sure that this is going to affect a lot of people, but if you do get affected by it, I'll tell you right now, it's a big zinger to you and it's something you're not expecting. I've seen people who would generally get a refund end up owing tax because they happen to have a lot of tax preference items. So I hope this was helpful, determining what you need to know about the new alternative minimum tax and planning for it accordingly.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.